Perspectives 24-hour special. I hope you're not getting bored of my voice, but this is episode 5 for me, and I'm really excited to talk about metals outlook for 2021 with my 3 subject matter expert colleagues talking about gold, iron ore, and copper. First off, I wanted to introduce Saida Litosh, lead analyst for metals research, to talk to me about the outlook for gold. Welcome, Saida.
Hi, thank you.
Thanks for joining us here today. And we've actually done an episode, I think last year, around the surge in gold price. So I wanted to get your thoughts on whether you see this continuing in 2021 and what are the key drivers behind the performance for gold being so good in the last couple of months.
The key driver behind gold's impressive performance in 2020 was undoubtedly the COVID-19 outbreak, which pushed the global economy into the deepest recession since the Great Depression, prompting governments around the world to implement unprecedented stimulus measures, pushing interest rates further into negative territory, all of which prompted investors to move towards safe haven assets such as gold. Looking ahead, we believe that the underlying macroeconomic conditions will remain favorable for gold. The ongoing battle with the COVID-19 and economic headwinds, the low interest rate environment, increased debt levels and rising inflationary expectations, along with the continued weakness in the US dollar, will continue to support gold in 2021. It is possible to see gold reaching previous highs and even move beyond that to reach a fresh record sometime this year, particularly if the road to economic recovery and return to normal prove to be challenging. Having said that, with the COVID-19 situation likely to improve sometime this year, particularly around summertime, and with the planned rollout of vaccines, we may well see gold coming under pressure. So overall, the key factors remain favorable for gold, and we expect to see good gains, perhaps at a more subdued level than what we saw last year.
Thanks for these predictions, Saida. I think we've also witnessed a record level of inflows into gold ETFs last year. Do you see the same trend continue in 2021?
Yes, absolutely. In 2020, we witnessed quite an astonishing rise in investment in gold exchange-traded funds. Gold ETFs enjoyed 12 months of uninterrupted gains since November 2019. And in the period between January and October 2020, ETF investors added more than 1,000 tons of gold, pushing global holdings to an all-time high of over 3,960 tons in November. So as such, net inflows over the 10-month period were significantly higher than the previous record annual buying we saw back in 2009. In the past couple of months of 2020, however, ETF investors sold some of their holdings, something around 170 tons. But even despite that, net inflows for the year were still represented the highest ever annual gain since the inception of gold ETFs in 2003. I've just mentioned the underlying macro uncertainty, and that the road to economic recovery is still a long way, and we're likely to experience various related to tackling the virus. And while it is very likely to see that global ETF holdings will continue to grow and even possibly reach a fresh record level sometime this year, we may not necessarily see the same level of annual net inflows that we experienced last year.
Thank you. And the final thing I wanted to check in with you is around the fact that central banks have literally become net sellers in Q3 2020. Do you see the same trend and more selling to continue? Especially because I think buying in general has really kind of dropped throughout the entire year.
Yes, indeed. Central banks shifted to net sellers in the third quarter of last year. And this actually happened for the first time in nearly a decade. Looking ahead, we may well see gross sales remain elevated in the coming months, particularly as countries continue to mitigate the economic damage inflicted by the COVID-19. Moreover, last year we witnessed some countries taking advantage of the gold's astonishing price performance, and this is something we may see taking place again this year, particularly if the gold price reaches previous highs or moves closer to those levels. However, having said that, as countries re-emerge from the COVID-19 crisis, we expect central banks' gold purchases to remain strong going ahead. Overall macroeconomic environments will remain supportive with all the economic and political uncertainty, and interest rates are likely to remain suppressed for the foreseeable future. Meanwhile, the expected fiscal stimulus to revive the global economy make it an even stronger case for central banks, particularly in emerging markets, to continue to diversify their international reserves away from the US dollar in favor of gold.
Thank you. Super interesting insights, and I'm sure we'll have plenty more to discuss as the year progresses. Saida, thanks for being here with us today. I now want to bring up your colleague, Bruce Alway, our Director of Metal Research, but thank you for coming to talk about copper and the outlook for copper price and demand. So Bruce Alway, Director of Metals Research for Refinitiv, thank you.
Thank you. Good morning, Trang.
Morning, and thanks for being here with us today. So the first question is really around the recovery for copper. Obviously, so much has happened in 2020, and no one would have expected the economic impact of obviously the pandemic. But copper has actually, from my understanding, recovered quite quickly. Did you anticipate that, and were there other surprises in the market?
Absolutely not. I think it would be to anticipate, the rise that copper has put in would be unprecedented. I think if you just look back a little bit to the start of 2020, before the pandemic, the actual market looked pretty constrained. You had supply which was faltering, and you had a slow demand growth environment. So really, you had a fairly well-balanced market and fairly boring in terms of the outlook for price. Post-COVID, and it feels a bit like whiplash. Coppers, if you mentioned, have been skyrocketing. They've broke $8,000 a ton. That's the first time since February 2013. And essentially, copper has doubled from the March low that it posted during the start of the pandemic in the kind of Western world. So what are the two main drivers? Basically, intensive buying from the number one consumer, China, and funds. Funds have been betting on a longer-term, commodities-intensive global recovery. I mean, in terms of other surprises, if that wasn't enough, I think probably on the supply side. So in Chile, which is the world's number one copper producer, output did decline, but certainly not as much as expected, given the challenges we all know about in terms of, operating in a COVID environment. And if you just look next door to Peru, the second largest copper producer in South America, production was far more severely impacted. So that was that kind of balanced out the market a little bit, gave it a bit more support on the supply side.
Thank you. And another, important market, I think, for copper is the US. And what do you think with the new Biden administration? Will that impact copper demand in the long run?
Certainly. Look, I think I mentioned just previously the funds betting on infrastructure programs to boost economic growth. And, Joe Biden has set that out in his Green New Deal. And it certainly, it takes climate change basically to the core of a national security priority. So this is a big shift. it's obviously huge, but it includes accelerating deployment of electric vehicles, improving the energy efficiency of all state buildings, and there's going to be a massive railroad expansion. Maybe not so much for copper, maybe for iron ore and steel. That's something Tamara might talk about. In terms of delivery, I think Biden's Green New Deal is more credible. If you remember Trump's infrastructure push at the beginning of his administration, that also revved up copper prices. This time, we're in the same situation. Trump's administration didn't really deliver in terms of infrastructure and didn't have a massive impact on copper demand. But I think this is certainly more credible. And I think if we just reflect a little bit, given its inauguration date with Biden, Trump on the wall between, I don't even need to mention where it is, but he promised 2,000-mile-long wall. This was clarified later to mean half of that. And then later, still in January, it was classified, re-clarified as a 500-mile stretch. And not even that has been completed. So, I'd say, look, I think whatever the outcome, the US is not a massive copper consumer. So I think the growth is coming from a slightly lower base. When you're talking about China, it's a different story.
Thank you. And I guess the final question is whether you have any predictions on copper price in general for this year.
Of course. What would an interview be without a price forecast? So I think in terms of fundamentals, mine supply, we're looking at a 2.5% rise year on year. And remember, that's after a kind of flat to lower for the last 2 years. Mine supply has been pretty limp. So 2.5% increase this year. Of course, some of that is just a rebound from, a COVID impacted 2020. On the demand side, yes, there's a massive infrastructure stimulus package in China, but we see that weaker in the second half. So I think on balance, we see a copper market in a modest deficit in 2021. Now that, of course, means it's going to be supportive of higher prices. Do I think copper is overbought at $8,000 a ton? Yes, absolutely. It looks extended. Fund activity has clearly played a big part in that push, taking prices away from the kind of fundamental balance. And let's just think about the risks before we pick a price out of the air. In terms of the risk, copper could be dragged down by a broader market correction. China's latest economic stimulus surge may have already been past the peak. And I think lastly, there's a bit of a kind of consensus that the Western industrial supply chains are going to pick up in Q2. What happens if that doesn't happen? So, honestly, I think you need all three of these risks to go away if you want to see copper stay at 8,000 or extend beyond it. So for me, the risks all lie on the downside. So I'm looking at an average for the year about $680 to $7,000 per ton.
Thank you. Really interesting predictions and forecast. Thank you so much again, Bruce, for being here with us today. And I think I'm going to turn to the final interview for this talk. Thank you. And I would like to welcome Tamara Thorne, our senior metals analyst, to talk to me about iron ore.
Hi, Trang. Good morning.
Well, I believe has surged to a record high of, 2013 levels. Can you tell us more about what the drivers for this is?
So the short answer is China. The country's imports about 70% of global seaborne iron ore. And as Bruce mentioned, I'm sure you've heard it many times before, China actually managed to get the pandemic under control very quickly. And it returned to normal economic activity pretty much by the end of the second quarter of last year. And on top of that, there was some enormous amounts of fiscal stimulus brought to support infrastructure projects, like Bruce mentioned. And so obviously the average iron ore price gained about 15% year on year in 2020. So far this year, on an intra-year basis, it gained 6%. So it continued rising. It is also true that there was some supply disruptions last year, although Refinitiv Metal Screener shows that global iron ore production itself actually rose by 2% compared to 2019. Now, this year, all of these drivers are very much in play this year as well. However, although our definitive proprietary model expects China's iron ore demand to grow in 2021, undoubtedly there will be more headwinds. And the headwinds will be in the form of thinning steel margins, and because of higher raw material prices, newly reaffirmed government measures to reduce steelmaking capacities, and also idle capacities in Europe, which problematic to restart.
Okay, thank you. And you've touched on China, and I want to kind of zoom in on the steel industry integration plans in the country and how that might impact iron ore as well.
Yeah, so integration plans, it's actually the new 5-year economic plan that was introduced by China's Ministry of Industry and Information, and it is calling to cut steel output, as of course is one of the main energy-intensive industries. And as part of that, we're seeing steel companies mergers in provinces like Hebei, Jiangsu, and overall this makes it easier to control carbon emissions. But the reality is the previous 5-year plan, under which it was also intended to steel output to be cut, it actually led to over 1 billion tons steel being produced last year, and that was a record high. So there is some skepticism whether this will actually reduce output. But what it is likely to happen this year, we have seen it already actually, is that higher grade material and pellets will see some uptick in demand, because it's sort of coke efficient and less energy intensive.
Thank you. Really interesting how what changes they make to the industry to kind of reduce carbon emissions, especially with China kind of committing to carbon emissions. Yeah. Okay. And I guess the final question I had, and you again touched on supply chain disruptions and obviously all these temporary mining closures that happened last year because of COVID, but also extreme weather events. What are your predictions for supply chain related issues this year?
Well, firstly, weather-wise, of course, as you might know, and many people know, that scientists expect heat and atmosphere to continue rising. So it would be reasonable to assume at least the same level of mine disruptions due to flooding, fires. Brazil and Australia, these are the main producers and exporters. But in terms of production capacities, there were some fears last year that COVID-19 might force producers to reduce capital spending. The reality is, a report after report, financial reports that we have seen so far, mining companies' revenues were not affected too badly, and most projects are still on track. And the projects like Fortescue's Eliwana Iron Bridge, Rio Tinto's Gudai-Darri, Vale's Serra Sul, and Gelado. So it's very much going ahead. Plus, in the longer term, we know that China is planning to build new mines in West Africa and Australia, in addition to Simandou project in Guinea. But this year, talking about this year specifically, the new addition might provide some downward pressure on prices. There are fears of that. But essentially, the prices will stabilize more than anything.
Thank you. Really insightful, Tamara, and thanks again for joining us on the show today. So that brings me to the end of our show, and I just wanted to thank Bruce, Tamara, and Saida again. And if anyone wants to find out more about the topic, we have a report titled "The Rise of Commodities in Electronic Trading," and there's a QR code now on screen and also a link in the chat if you would like to kind of find out more about this report. And I'm going to be back at 5 p.m. Singapore time, 9 a.m. London time to talk about emerging and frontier markets outlook. See you there. Bye.